what's going on in your eyes in the betting market world as you put out this week's Luckbox magazine?
Well, thanks again. Yeah, Luckbox went out today, as it does every Thursday, and it's always free for digital subscribers at getluckbox.com. Today's issue, as every issue does, covered some prediction market news. What we spoke about today was Vitalik Buterin. I think I always mispronounce his last name, but the co-founder of Ethereum has been following prediction markets for quite a long time and has this theory about information finance. And we mentioned it in today's newsletter. I think it's worthy of talking about. Specifically, his note is that while not everyone's going to be a prediction market trader, it's not for everyone. Yet it does have a role for anyone who's an active trader or investor. And if you scroll down a little bit to, this is the newsletter from today, we think we might be amidst a market melt up right now, and cited Blackwell chips, the banana sale at Sotheby's yesterday, last night for $6.2 million. And of course, the price of Bitcoin, as it approaches 100,000, as maybe some indications of a melt up. But we also get into prediction markets. And what Vitalik is speaking to when he speaks to information finance is the notion that prediction markets are not only vehicles for traders, but they're also real-time news sources and valuable information for active investors and traders. And for example, if you were to look to election evening, which generally has been cited as a validation for prediction markets in general, because they called the outcome not only accurately, but promptly in real time. The prediction markets were already trading in the 90s for Trump long before any of the networks called the race. And there was just an indication that they're a valuable source of information. And part of that goes to any iterative platform that relies on new information. And prediction markets, as being markets and the liquidity of those markets, rely on new information because people buy and sell their positions, they trade their positions, they add to their positions. And it goes back to something that the Rand Corporation came up with back in the 60s, and that was something referred to as the Delphi method. We've covered it years ago in Luckbox magazine. And the Delphi method is an iterative thought process and decision-making process that relies upon people updating forecasts based on new information. So the problem with polling is it's one vote, it's one time, but a market, and the reason that stock markets are said to be efficient is because they're integrating real-time information. And prediction markets offer that same opportunity to be an ongoing source of news and information. And I thought it's a worthy discussion. We linked directly to the white paper that Vitalik wrote that makes this reference. But it was also a reminder, and the irony of this is that this went out, I think, about 11 o'clock Central Time today, and I used Matt Gaetz as an example. And what we referred to, we pointed to both to the Kalshi market and the other link in there where it says valuable real-time outlook. That's to the Good Judgment Open. And if you want to click through on that, we can talk about what that site is. And the Good Judgment Open is also, you got to sign into that, so that's not going to help you. But it's a platform that's available for real-time information on a variety of different markets. The Good Judgment Project is something that Phil Tetlock, the author of Super Forecasters, is a participant and an advisor to. And the Good Judgment Open has as many as 200 what they call super forecasters. These are people who have been trained in forecasting, and they are housewives, CEOs, data technicians, you name it. They come across all different fields, but these are people as a result of their training or instinct or intellectual IQ, emotional IQ, have an uncanny yet consistent knack at forecasting. And they're guns for hire. Pharmaceutical companies use them, technology companies hire them, military industrial complex hires them to forecast the outcome of a new product launch or an FDA outcome, et cetera. And these people reside over on the Good Judgment platform, and it's a source of information because it uses the Delphi method. they don't just put one forecast, they update their forecasts continuously. As a result of that, it's processing news in real time in the same way a prediction market does. So we mention this because it's a valuable resource to traders. Anybody looking for real-time information and consensus from trained forecasters, and there is such a thing, on interest rate outcomes, geopolitical outcomes, you're going to find it over on the Good Judgment Open, in addition to sites like Call Sheet. So that's what we were talking about in today's Luckbox. And remember, it's always free at getluckbox.com. You can sign up and receive the Luckbox letter in your inbox every Thursday. But while we're chatting about that, perhaps so the point of that, I use Gates as an example, and the prediction markets, both at Good Judgment Open and at Call Sheet at that time, were saying that he only had a 37% probability of becoming AG. And within about an hour, he dropped out. So once again, it's kind of a tribute to I don't want to hang too much on the idea of accuracy, because it's not a question of accuracy, but it's a platform that integrates and updates according to real-time information available in the marketplace. And it's hard to imagine being an active investor and not utilizing these platforms.
Jeff, in Luckbox, you did mention the Matt Gaetz news and development. His odds have dropped to 0 because he's now formally resigned, withdrawn his nomination to be Attorney General. He had meetings on Capitol Hill yesterday, which apparently didn't go well enough for him, so he's not going to be taking that seat. Andrew Bailey has appeared on the map as the front runner for Attorney General. He's the Missouri Attorney General currently right now. His odds have spiked by about 30% today. This all seems very fluid, although according to the reporting, the market that we really should be paying attention to right now is perhaps Treasury Secretary. But I think the point here is, though, that there is something that's been playing out in some of these remaining picks. There's a lot of folks who are not high odds that are coming out of the blue to take the win.
That's true. That's true. On the AG market, if you flip back there for a moment before we get to Treasury Secretary, sure, Andrew Bailey is the Missouri AG, but he was kind of snubbed by Trump when he went to Gates for his pick. There's also Mike Lee, the Utah senator. He's been senator since 2011, and he's come up pretty quickly. But I think Todd Blanche is someone to take a look at closely. He's got 20 plus years, 15 federal trials under his belt. He's defended the likes of Manafort and other Trump, part of the Trump coterie. And he wouldn't be a surprising pick as well there. But we talked about this last week, that predicting Trump is not, that's pure speculation. That's gambling. And I really don't think that these markets, although fun and interesting and a great source of news, because the news that's out there in the marketplace is going to be integrated quickly into these markets. And if the prediction markets are citing Bailey as a front runner, maybe perhaps Trump did snub him on the first round. It's not an unlikely outcome, even though still, trading below 50%. But in general, these are tough markets. I mean, who knows? Maybe Trump would go outside this list. If you scroll down, there's about 10 names on this list, but I wouldn't be surprised if he went with somebody like an Alan Dershowitz, And I'll tell you what else is kind of bubbling up. This is a hot one too. There is an active rumor, it's getting a lot of play on Twitter right now, that Trump will ask Alito to leave the Supreme Court so he could take the AG, is it the AG slot? Yeah, so he would take Attorney General so that Trump could appoint a younger justice for the Supreme Court to have more lifespan, a younger conservative justice. So that's in the conspiracy theory area right now, but it's getting a lot of play right now. So that's kind of a fun idea to watch as well.
I have a very hard time seeing Samuel Alito giving up a Supreme Court seat. But this goes to show, and we were talking about this last week, that if you're trading these markets, there have been names that have come out of left field and out of the blue. So if you're trading them, if anything's higher than 50 or 60%, I don't know if that's really worth trading to $1, because we could very well see a nomination sunk that turns around and a new name appears from basically nowhere. But I think the thing that interests me the most is I was trying to go over there before, which,
Sure.
we should talk about the Attorney General.
Yeah.
But for me, as someone who's also, relegated to financial markets, this has been the most interesting race to watch in recent days because it was Scott Bessent all the way for the past week. And then we saw Howard Lutnick pop up as a name. He, of course, becomes the pick for Commerce Secretary. Right. And so now it's coming down to people like someone who sits on Apollo's board, Mark Rowan, or Tennessee Senator Bill Hagerty, or even Bessent now is back up in the lead after some of the conversation today. I think if you're looking at any of these names, these are markets that are becoming very tough to trade because Trump says apparently that he wants to have all of the picks out by tomorrow. A week or two ago, anytime you saw any of these odds under, say, 15%, it was worth picking up for a potential long in a smaller size. But now, as we're approaching what's effectively zero DTE, and these aren't that liquid, I mean, these are liquid markets, but only $4 million traded. I don't know if it's worth the squeeze right now. I think looking at things beyond the cabinet nominations are probably worthwhile for most prediction market traders at this point in time.
I agree completely. These are zero DTE markets. They're kind of crapshoots. Trump is very unpredictable. He could go outside this list because Gates was certainly an outlier, right? So I wouldn't be surprised if that were to occur. Hagerty got a lot of play in the early days, but I see why Bessent would be in front right now. There's some concern about continuing to pick away at House and Senate seats as well, and that's what Hagerty would be giving up. So let's go back to your default instinct, and these are good markets to avoid right now. But it does bring up something that we talked about a couple of weeks ago, where I mentioned 3 rules for prediction market traders, and you just talked about getting out, trying to buy in markets below 30, but not looking at the markets currently at this point with only a date expiration on these contracts. And we talked about 3 rules a couple of weeks ago, and I wanted to add to that list. We had a lot of feedback as a result of it, saying, hey, there's more trading rules than that. So the first 3 we talked about, you might remember, the first one was read the rules. If, in fact, taking this market that you're in right now, or any market, you can show the listeners where the rules reside. If you're going to be in a prediction market, make sure you read the rules first and know exactly what it is that you're wagering on, right? And so that's a must. Read the rules first. Secondly, we said look at the order book. So if you're placing a trade, there is an order book. So if you were to, for example, click on Adam Gray's name right there, that opens up the order book. It shows you where buys and sells are. It shows you what the bid-ask spread looks like. The underlying, you can kind of identify areas of support and resistance, and it's critical to look at the order book before placing any trades. The third rule we talked about previously is don't get stuck in a contract that's waiting to resolve. If you've bought something and it's trading and it looks like that's the fait accompli, sell it at 96 to 98. Get out of the market. You can wait for the market to resolve at $1, but once it hits 99, that market's illiquid, and you won't be able to sell until the market resolves. And if there's a recount or any reason why that period's going to get extended, all that means is you don't have access to the liquidity to consider other opportunities with that capital in the interim. So selling at 96 or 98, so exiting a trade in the high 90s is a smart rule to follow. So let's add 2 more. Conversely, to exit a trade, perhaps it's a losing trade that you bought at 50, looking for it to go higher, sell it at 2 or 3 cents. Don't wait for it to close out either, because again, you'll be sitting there waiting for that little bit of capital, and it will just goes nowhere. There's no reason to hold these things to the binary outcome, because the trade-off is liquidity on that capital in the interim. And then the final one's kind of fun, and that is don't look at the comments or the chat room until you've placed your trade. There's a lot of garbage. There's a lot of trash talk. There's a lot of kids in there. There's really nothing to be gleaned from these comment boards. And generally, there's a lot of people talking their book. There's a lot of pump and dump. There's just no reason to go down that rabbit hole or sewage hole. So avoid the chat rooms until after you've placed your trade. They might be kind of fun, but don't let them influence anything you're doing, because none of that commentary is really value added. So now we're up to 5 rules for prediction market traders. We'll continue to add to that. But those 2 additional rules about selling at 2 to 4, exiting your trade there, and don't look at the comments until after you place your trade, I think that's going to help any prediction market trader.
I think with that last one, I smile because, there are certain times when I look to Reddit, for example, to see if there's any ideas out there that I find utterly ridiculous that are worth fading. I think of one that I saw over the summer unrelated to prediction markets, but someone was saying they were getting short copper because the quality of the bronze medal in the Olympics wasn't impressing them. And I said, well, if they're getting short, I definitely should be long, right?
Yeah, right.
But you don't want to base trading decisions in reality on analysis like that. So have your process, stick to your process, and then once you have your position in place, then go see for some feedback, right? See if it's worth refining your process, or maybe you just have done something wrong, or maybe you've done something right that everyone else is missing, and that's your edge that you can take into the future, which is really, Jeff, I think an important observation here. You've certainly developed an edge in recent months. Part of my journey here is learning these markets and trading in and out of them has been following what you've been doing. So we have our 5 rules for prediction traders, but going through this election season now, where this is really no longer a niche type of fascination for people in finance and in crypto, it's become more mainstream, where these prediction markets are getting quoted on air on CNBC or Fox News or CNN, right? What has been the biggest evolution that you've witnessed in the past few months? And perhaps what's been the biggest thing that you've learned that you're going to take into the future?
Well, I think that goes back to Vitalik's notion of information finance, is that the media is starting to recognize these platforms as sources of valuable and perhaps essential information. And I think that notion alone, and if everyone, whether or not you intend to trade these markets, but they're still a valuable source of information. They are real-time sentiment indicators, just in the same way that the markets are. And, that'd be one thing. But the other point, I think, would be the validation of the markets. I talked to Tarek Mansour, the CEO of Kalshi, a couple days ago, and he gave me some updated numbers. They had 1 million signups so far in November. 1 million people entered that platform to trade. $275 million in deposits came in, and over $1 billion in betting volume. So that's directly from the CEO, and that's why they're throwing up markets quickly and giving people, since there's a lot of money parked there now after the election, a lot of those money is parked in markets waiting to resolve, and
right.
It's important for them to give those traders some more opportunities. And speaking of opportunities, there's a market we talked about last week. I'd like to revisit it. It's that California house market, the California House 13 market, which has been driving me a little bit crazy. We talked about this last week. In fact, it was sitting almost exactly where it is right now, basically as a 50-50 market. I told you I'm long John Duarte. He's the Portuguese incumbent who is trying to hold on to his seat there. This thing's going to go down. When I ran the math on it, did the spreadsheet for the outstanding counties, this is basically around Modesto, Turlock, Stanislaus County, Merced County. Yeah, right. That's in this area. It's a swing district by any means, but when we started this, there was about a 2,000 lead for Duarte. I knew that was going to be cut down, and I suggested that based on my math and projections, by just taking the 6 counties and extrapolating the current vote count of every county that exceeded 70% of the votes in House, and extending if they continue to run at that same level, what the final vote count would be. And I came out to Duarte with about a 300 vote lead. Well, it's a narrow right now. They're dropping new votes every night. Right now, I believe the lead is 351 votes. I even tried to get a jump on this, and this is what prediction market traders do, right? Called the Modesto B news desk, and said I was a teacher at one of the high schools teaching a civics class, and we had a project on the outcome of the race, trying to understand how I could maybe get another source of vote count that would be more vibrant than depending on Decision Desk HQ or New York Times or the NBC is also doing, the NBC vote tracker is doing a good job of keeping back the vote traders. And they said they rely on the same news sources. So I want to see if there's any jump anywhere to get something in real time, but it doesn't exist. But this is going to be a tight race. This is going to come down to 200 or 300 votes. So far, I'm kind of sticking with my original idea because when I did the math and then redid the math again earlier this week, it still looks like this is going to come out in the Republican incumbent's favor. But this is a tight race, so we'll see what happens. Initially, I said I'd keep a stop on this at 35, but the reason I didn't, it's so reactive in this market right now that it's easy to touch that with any drop. If the math continues to hold out, I'll continue to hold on to this trade. So it's something I'll be accountable when we re-meet back in January. Let's see how the outcome of this one is.
Hopefully, by the time we come back in January, they're done counting the votes.
That's right.
It's November 21st. The election was on November 5th.
Yeah, you know what? There's one more thing worth mentioning, too, and it was noted by another reader who sent a watcher who sent in an email, and that is he noted that you're making the assumption that prediction markets are a fait accompli. And it was actually a good point because they're not. You know, it's important to understand how we got to where we are right now. The CFTC attempted to block Call Sheet from listing contracts back in September, and they cited the Administrative Procedure Act. A judge by the name of Cobb ruled in Call Sheet's favor, and then there was an appeal, and that's they requested a stay of the judge's order, and then the appeal allowed. Unanimously rejected the CFTC's appeal and allowed Call Sheet to continue to offer these markets, basically finding that there was no concrete evidence of public harm, and that was the note from the bench in reversing that appeal. However, there's still an outstanding argument. The CFTC is now formally appealing the court and Cobb's ruling, and Call Sheet has most recently argued that only an act of Congress would be able to prohibit trading. CFTC is making the point that they think this falls under gaming and therefore should not be allowed under CFTC rules. That it's gaming, it's betting as opposed to trading. And obviously, there's a case that could be made there. The CFTC's response to Call Sheet's brief is expected by December 6th. And sometime between December 6th and when we resume in January, we should have a final ruling on the fate of prediction markets. So it is a good point that this is not written yet, although it looks with a favorable administration coming in. The CFTC was typically 3-2 Democrats against Republicans on prediction markets. It looks like a favorable administration is going to rule more favorably on the prospects of prediction markets going forward, and that's something else we have to look forward to in January.
Rostin Benham, the CFTC chair, was sworn in January 22, nominated by President Biden, of course. President Trump is coming in, and he seems to be taking a friendlier stance already. In anticipation of his next nomination, or rather, as opposed to being fired, SEC Chair Gary Gensler resigned today. Yeah. So it wouldn't be surprising if you see more of these crypto-friendly and certainly prediction markets. There's a strong connection there to crypto with Polymarket, of course. Yes. They may have someone more favorable in their corner in the regulatory sense.